Okay, so you've probably heard about the Federal Reserve printing several trillion dollars. You've probably also heard how this could eventually lead to inflation. But most dramatic of all is headlines like this. As gold surges, US dollar reserve currency role is at risk. If you're not familiar with what this means and the potentially huge implications it could have, listen up, as this is a big deal. So in this video, I'm going to break down what it means when we say that the US dollar is the world's reserve currency. I'm going to look at the reasons why some people believe the dollar's reign could be coming to an end. And most importantly, I'll explain what this means for you and what you can do to prepare yourself for this. So to tell you the truth, I was hesitant to record this video. Most of you are from the US, and I know I wouldn't love someone telling me how the British pound might be headed on a downward trend, even though on that occasion I actually kind of agree with it. But to be honest, I want to be truthful to you in presenting what I've researched, even if it means some people disliking this video. So in this video, I'm going to present the arguments why the US dollar might not retain the strength that it has today. However, there are two sides to every debate, and there are theories, such as the US dollar milkshake theory, which explains why the dollar could actually increase in strength in the coming years. So let me know what you think about this video at the end in the comments, and comment if you want to hear the opposing argument in a follow-up video. For now though, let's get into this. So let's kick it off with a brief explanation. A reserve currency is essentially a currency that just about all central banks worldwide hold. They use it to store some of their wealth, and they use it to transact with another country. For example, if Canada buys goods from China, China may prefer to be paid in US dollars rather than Canadian dollars. And this goes for many countries globally. Let's say Brazil wants to trade with South Africa. Brazil might say to South Africa, I don't want to get paid in your national currency. Maybe I don't particularly trust it. And South Africa might say the same thing to Brazil. So to overcome this, because they still want to trade with each other, what they'll do is they'll agree to use the US dollar instead. That way, they can continue to trade, but they don't have to worry about their individual currencies. And as a result, the US dollar isn't just America's currency. In a way, it's kind of like the world's currency. And why does this matter? Well, because it gives the USA a lot of power. In fact, as Ray Dalio describes it, the ability to print money and have it accepted by the world, which is an ability that only a major world reserve currency country, especially the United States, has, is the most valuable economic power a country can have. So if we think of the US dollar as kind of like being the world's currency, well, imagine how much power you would have as being the only country who has sole control over what happens to the world's currency. Think about it like this. Let's say Canada wants to borrow some money from another country. The country may turn to Canada and say, okay, we'll lend you some money, but we don't trust your currency that much. So we'll lend you money, but it will be denominated in US dollars. We'll lend you, say, 100 billion US dollars. Several years down the line, Canada might be struggling a bit and they can't pay off their debts. Well, unfortunately, they don't have that many options. Of course, they could print some more money, but they can only print Canadian dollars. And as they begin to print Canadian dollars, the value of each of these dollars compared to the US dollar might weaken over time, which means that they are no closer to paying off their debts. And to be clear, this is the same for every country as well, not just Canada, the same for Britain and every country out there. Now, let's imagine the exact same situation, except it's the USA borrowing money from another country instead. Because the US dollar is the world's main reserve currency, the country who loans the United States money will want payment back in US dollars. It's several years down the line again, things aren't looking so good for the US, and they aren't looking like they'll be able to pay off their debts. Well, fortunately for the United States, they have complete control over what happens to the US dollar. So when they need to pay back $100 billion, they can print some of those dollars if they want. Maybe they'll print, say, 50 billion, and then they'll only need to find another $50 billion to pay back the rest. Okay, so this may sound like a slight oversimplification, but here's how Ray Dalio describes it. The Chinese are now holding about $1.1 trillion of US debt, which is about a third of their total reserves, though less than 5% of US debt. Japan holds about $1.2 to $1.3 trillion of it. Because these debts are denominated in US dollars, the US won't have a problem paying them back because the Federal Reserve can print the money and pay them off with depreciated dollars. Okay, so clearly having a large amount of the world's trade and debt being denominated in your currency gives you a lot of power. So What's the problem? Well, I was reading this two-part article written by Ray Dalio over the past week, and it was truly fascinating. It basically runs through the economics which led up to World War II and how money has been produced and controlled ever since, touching on topics that I've talked about with you in the past, like Franklin D. Roosevelt demanding that all US citizens hand their gold into the government in 1933, President Nixon cutting the ties between the US dollar and gold in 1971, and so much more. It was one of the most interesting articles I've read in the past few years, so I'll include a link in the description if you want to check it out. But I'll break down the key takeaways here for the purpose of highlighting Dalio's thoughts on why the US dollar may lose its status as the world's reserve currency, what this means for us investors, and most importantly, how we can actually make money out of this situation by preparing ourselves. This chart shows us the estimated share of global exports that the USA, China, Great Britain and Russia have commanded over the past 100 years. As Dalio notes, after World War II, US exports were relatively steady, between 20 and 25%, until around 2000, when Chinese exports rose from around 5% to around 15% now, which is now the largest in the world, and US exports fell to about 14%. But exports are only half the net income picture. So think of a country like a person. You make a certain amount of money each year, this is your income, and you spend a certain amount of money each year as well. This is your outgoings. Well, for a country, they make income relative to other countries by exporting goods and services, while they spend money by importing goods and services. So we can't just look at exports, as exports are only half the picture. This only represents how much money has been spent, and it doesn't show us how much has been earned. So let's look at earnings too. It is export earnings minus import spending that makes the net income of a country. To convey the picture for the US, the next chart shows US exports of goods and services minus US imports of goods and services since 1900. As shown, the US sold more than it bought until around 1970, and then started to buy more than it sold. Now, if a country's finances are essentially the same as a person's, we make a certain amount of money each year and we spend a certain amount, then how could the US have spent more than they've made over the past 50 years? Well, just like you or me, they can either spend their savings or they can take on some debt. As noted, naturally, if one buys more than one sells, one has to finance the difference by some mix of drawing down one's savings and or borrowing. The United States financed its deficits by running down its savings and building up a lot of debt that is owed to foreigners. This chart below shows the net international investment position of the United States as a percent of US GDP. So this right here is kind of the problem. Remember from earlier when we saw that Canada being in debt was a much bigger problem than the United States? After all, the USA's debt will be in US dollars, so they can print their way out of it if needed. Well, that only works to a certain extent. You see, as America's debt grows, the likelihood of printing money grows too. And going back to our example earlier, if you're Brazil or South Africa, you're holding and transacting with the US dollar, partly because it's much more stable than your currency. Well, if many dollars are being printed, this could ultimately damage the stability of the US dollar. And unfortunately, due to recent issues that have been affecting every country globally, this has only exacerbated the issue. As noted, in March 2020, after the coronavirus pandemic came along and with it, the isolation it necessitated, incomes, employment and economic activity plunged. The US central government took on a lot of debt to give people and companies a lot of money, and the Federal Reserve printed a lot of money and bought a lot of debt. Now, to be fair, Dalio also goes on to highlight that other central banks have taken a similar approach. Let's be clear about this, it's not just the Federal Reserve that are printing money. Just about all central banks globally are printing vast quantities of their own currencies. But it is the sheer amount of dollars and the aggressive approach the Federal Reserve is taking which is leading some to question if the approach is sustainable for the value of the dollar in the long term. As noted by Goldman Sachs, the US dollar's reign as the world's reserve currency is coming under threat, as evidenced by the recent surge in gold prices. Real concerns around the longevity of the US dollar as a reserve currency have started to emerge. Gold is the currency of last resort, particularly in an environment like the current one where governments are debasing their fiat currencies and pushing real interest rates to all-time lows. So US dollars have been losing out to gold recently, but the dollar has also suffered against other currencies. This chart is the US dollar index chart, and it shows us how strong the US dollar is compared to 6 of the top other currencies around. The euro, the Japanese yen, the Great British pound, the Swiss franc, the Canadian dollar, and the Swedish krona. And as we can see, the dollar has been losing strength in comparison to other countries quite significantly over the past few months. On top of large-scale money printing and taking on large amounts of debt, you could also point to certain policies in US government which are designed to help US citizens but could ultimately harm international relations, which is a key factor for the stability and use of any reserve currency. So the question is, what can we do to protect ourselves? How can we plan for this and potentially even make some money from it? Well, I'm not a financial advisor, I'm just a regular guy researching this stuff to really get my own head around it, and then I just share my research with you. So definitely don't trust a random guy on the internet, be smart, do your own research and make your own decisions. By the way, if you do enjoy the time and effort that goes into these videos, please do smash the like button as it really helps with the YouTube algorithm. So what does my research indicate? Well, from my research, gold and a bit of silver are the best hedges against the dollar crashing in value. I've been bullish on gold for some time and I've released several videos on it. I even released a video recently discussing the merits of gold even after such a successful past year. You can check that video out in the description after this. Now, I think taking a portion of money and investing it into precious metals like gold and silver is probably the best strategy, and likely all that is needed for most people. But if you do want to take it a step further, you could also consider diversifying across different currencies, which you can do these days on an application on your phone for virtually zero fee and while receiving the interbank exchange rate. Now, let's be clear, I'm not saying it makes sense to take all of your dollars and use that to buy euros or Swiss franc. I'm talking about a small portion of someone's cash holdings and picking a couple of currencies that look especially strong. Like I say, I'm personally a much bigger fan of buying gold as a hedge, but I want to be thorough in showing you my research. So here's a look at how the pound has lost value compared to the euro over the past few years. Extra points if you can place when the Brexit vote was passed on this chart. Here's a look at the conversion rate between the US dollar and the Swiss franc since 2000. As you can see, there was a time when the dollar was so strong compared to the franc that you could purchase 1.8 francs with just $1. Today, however, $1 wouldn't even purchase 1 franc. I think it's fair to say that British investors such as myself would have been better off if we'd have held some euros as well as pounds in the lead up to 2016. And US investors would have been better off holding some of their cash in Swiss francs over the past couple of decades. Now, this is interesting. This chart shows us the proportion of currencies the central banks are holding in their accounts, or in other words, which are currently considered the reserve currencies of the world. And this could offer us an insight into what the central banks view as strong currencies. As we can see, the US dollar is still 60% of the holdings. So while some believe that it could lose its status as the world's main reserve currency in the next couple of decades, it is clear to see that the dollar is still a long way ahead today. Next, we have the euro with over 20%, followed by the Japanese yen at nearly 6%, the British pound with nearly 5%, the Swiss franc with 0.15%, and other currencies totaling 2.5%. Of all of these currencies, the Swiss franc has been the most stable for the past couple of decades, but there simply aren't enough Swiss franc in circulation because of Switzerland's comparatively small economy for central banks to hold it in a large quantity. Dalio also describes how he believes that the Chinese renminbi or yuan could be the world's major reserve currency if the dollar falls. And of course, the size of China's economy is large enough to support this. But it's also interesting to see the central banks hold a currency such as the euro in far higher quantities. Let me know what you think in the comments. Do you agree with Dalio that the dollar might not be the world's reserve currency in the coming years? Tell me if you'd like to hear the opposing argument for why the dollar could actually strengthen over the coming years compared to other currencies, and I'll share my research on that. If you've enjoyed this video, don't forget to smash the like button. Check out this video up here, and of course, just thank you for watching.